Are you a business owner or leader looking to utilize your financial statements in a simple and intuitive way to more quickly drive results in both profit and cash flow in the business? Well, this video is going to quickly go over the key levers of the business so you know what to focus on to drive that profit and cash flow. So starting with the income statement, there are the high level sections, but really there's only three things you can do to increase the profit of the business. Number one, increase sales, either through throughput or price increases. Two, decrease your cost of goods. Those, of course, are your direct labor, materials, and other costs to deliver your product or service to your customer. So decreasing cost of goods. Or number three, decreasing expenses or holding them the same as sales growth, and therefore making expenses less as a percentage of sales. So really, those are the only three things you can do to increase the profitability in the business. Now, some tactics may affect more than one, like say product mix or customer mix might impact both sales and cost of goods. But understanding which of these levers is going to have the biggest difference, or said another way, which of these levers is most out of whack. If your margin is super low, there's really not a lot of reason to keep generating sales until you fix your margin problem. Similarly, if expenses are out of control, we've got to start by getting those on track. Those are the three things you can do to impact the profit in the business. Similarly, on the balance sheet, there's only a few levers that you can actually pull. So looking at a balance sheet, we can collect our receivables faster, the money that's owed to us. We can turn our inventory faster, hanging on to it for less time on trucks, in warehouses, in stores, whatever it might be. The more inventory we have, the less cash we have. And finally, how quickly we pay. Sometimes we can stretch our payables a little bit without hurting the supplier or ruining the relationship, but that will also increase cash in the business. Now, the balance sheet's a little more complicated. So debt is a lever, capital assets are a lever. They're a little more complicated, and it's a little bit harder to pull those levers on a day-to-day basis. So really, the six levers I've shared with you are the ways to improve profit and cash flow in your business on a day-to-day basis. And again, we're talking increasing sales, decreasing cost of goods, decreasing expenses, collecting faster, turning inventory faster, and maybe paying a bit slower. So when you receive your financial information, when you're looking at it, the number one question to ask is, which lever can I pull to have the biggest difference in my business over the next month or two that's going to impact our cash or profit? Thanks for listening, and I look forward to talking to you soon.